This next chart is from Calculated Risk blog, and it is a US only chart because we don't have good worldwide data for these types of measurements. But it reveals something very fundamental about economic progress and technological progress. Something that is a very robust indicator that transcends many other less important indicators. And that is what percentage of personal consumption expenditures, PCEs, are devoted to energy goods and services. So everything from gasoline costs to electricity bills to other energy services that a household might pay for. Now remember, personal consumption expenditures are a subset of income. If this were a percentage of income, the decline would be even sharper because income is exceeding personal expenditures to a degree that was not possible many decades ago. More people actually have enough income to have savings to at least a greater degree than before. And that's why net worth per capita is rising. But in this chart, we see here this horizontal axis of time from 1959 all the way to present. So a very long-term time horizon. And as you move rightwards, time moves forward, gets closer to the present. And in this vertical axis, we have the percentage. And in 1959, 7.3% of personal consumption expenditures were devoted to energy. And at that time, households had at most one car in the United States, and most people in the world did not even have a car. But in the United States, households maybe had one car, and then this percentage was declining. Then during the 1970s, due to the Yom Kippur War, the oil embargo, and other oil price spikes, this percentage rose by a lot. It went to a very high level, 9.5% for a short while, and there were gasoline lines in that era, and then it fell very quickly, and then continued to decline on this trend. And as you can see, this long-term trend is towards a continuously declining percentage. During the 2000s, there was also a rise because of all the peak oil fears. But then that fell back down too, because now technology has advanced to a point that there is continuous pressure to have all energy commodity prices decline and for substitution and a ramp up of alternative energy sources such as wind and solar. And recently, we were at an all-time low at about 3.3%, which would seem extremely impressive to anyone from the 1960s and certainly from the 1970s and 80s. And yet this rise from 3.3 to 5%, which was itself a record low in the late 1990s, created disproportionate hysteria about hyperinflation, and it's already falling back down quickly. But the people who want to push an inflation narrative, most notably conservatives and libertarians in the US, who you think would be happy about this long-term trend, instead want to fixate on the brief rise, which is very, very underwhelming compared to these historical trends, because the structural long-term trend is downward. And this chart is a hyperbola, it's not a straight line, so it can never go to zero. However, it keeps halving. 8% to 4% took a certain amount of time. 4% to 2% is another halving, and therefore a similar magnitude of improvement as would be 2% to 1%. We will quickly get to the point where energy consumption as a percentage of personal consumption expenditures is very, very little and beneath the noise level, independent of what the media might want to say. The way things are going, we will eventually be at a point where this is down to 1%, and then a rise from 1% to 2% will cause incredible hysteria about hyperinflation and a claim that we have had hyperinflation for the past 500 years or whatever. It's really going in that direction. The reality is decoupling from the media narrative to a truly astonishing degree, and fewer people are actually looking at data. And this trend also masks yet another layer of improvement, which is how we are getting more and more output per unit of energy. The computational power we get per kilowatt hour of energy consumed is much better than it used to be before. Cars have much higher miles per gallon, even if you're using an internal combustion engine car. Miles per gallon is 3 times better than it might have been in the early 1980s. Household appliances are much more energy efficient. Refrigerators consume a lot less electricity than they did 50 years ago, even though they are far better engineered than they were in those days. All of those improvements are not even captured. If an American from 1959 could look at the American household of 2023 and evaluate that based only on energy consumption as a percentage of income, as well as the type of devices in the home that are consuming energy, they would find 2023 to be extremely futuristic relative to what they're accustomed to from 1959. But pessimism sells, and that is why that is what you see in the media. But this chart reveals quite the opposite, and it is a data point that anyone interested in futurism, in finance, and in prosperity gains and economic progress should be tracking closely. And this is one of the charts that I do feature frequently on this channel. Thanks for watching.